We are at the business update segment of the show, and we are going to be talking asset finance. Now, for those who are dealing with modalities, including being able to make a little bit more money, might understand asset financing. For those who are like Chris Higenyi, might actually not. We'll be speaking to Sandra Kagwa, a manager for asset finance at DFCU Bank, very shortly. But before I bring her on board, just a preamble about asset finance, which is a fast growing funding choice for many businesses across the world. With asset finance, a company uses its assets as security to borrow money or take out a loan against what they already own, making it easier to buy, use and benefit from what is being described as big ticket items. She'll be explaining what big ticket items are. Depending on the sort of asset finance one company is undertaking, responsibility for maintenance of these assets, including repair and insurance, may rest with you or the finance company. At the end of the term, the asset may return to the finance provider or ownership may transfer to you. That is not rocket science, but we need perspective. Sandra Kagwa, many thanks for joining us.
Thank you so much, Chris.
What is asset finance?
Asset finance is a product that we give to our clients. This involves movable assets, and we are looking at brand new assets that are durable. And at DFCU, given the history, we're one of the oldest leasing companies in Uganda. We started as a leasing finance company and later developed into a bank. So we provide a wide range of products in partnership with most of the brand new asset dealers in Uganda and outside Uganda. And what I would promise our clients right now, we have a campaign that is running for the next 5 months. And the offers in this campaign, we are financing up to 90% of the cost purchase of this asset. We are also charging zero arrangement fees, so it means you can get a facility without paying facility fees. Then we have a grace period of principal payment up to 3 months for those who wish to have it. And so we are also committing a quick turnaround time to our clients. Thank you so much, Chris. Quick turnaround time.
What does that mean?
That means we are able to give a fast response to our clients after they've submitted all the paperwork that we have. We're able to tell them whether we've approved or we are not approving, so that we move on to the next level to procure this asset.
Let's talk directly to the layman out there who owns a business and is looking out to gain or some return from asset finance. How do they go about it and what must they do?
What happens, a customer has to, first of all, have a source of income from which they're going to pay this asset. They should be able to know what they want, so they go out, talk to the vendor or the supplier of this asset, negotiate a price, then come up with what they call a pro forma invoice. This shows the cost of the asset and the other details, because it should either have a serial number, chassis number, engine number, so that we know the kind of asset that we're going to use. So we have the paperwork in place submitted to the bank. We do our analysis, then we come up with a decision. So on approval and paying out the supplier, because we don't give the customer the money, we pay out the supplier, then the customer takes the asset for either personal use or business use to make money.
Okay.
Yes.
Now, this just an example of one of those assets, or a litany of them, so that my lay person out there can understand effectively. I see there are some huge generators that a company might need, but the sheer size of that generator alone, if you were to buy it, can take out the whole money you have. Is that the kind of arrangement that allows a company own such a machine?
Yes, because you know, if a company used its cash to purchase, it then squeezes the other activities, which could be put to other use, like maybe paying salaries, purchasing goods. But at DFCU, we offer financing from a minimum of 50 million Uganda shillings up to a tune of 15 billion Uganda shillings. However, if the amounts are outside this cap, then we can seek exceptional depending on case by case. So we can give as low as 50 million. So if someone is taking out a generator of 50 million or a personal vehicle at 50 million, we can support this client by them just depositing 10%, either at the supplier's place or at the account, then we finance the 90%. So we look at items like vehicles, personal cars, we look at trucks, school buses, tractors, solar equipment, manufacturing equipment, medical equipment, all assets that can be movable, durable, and identified. Yes, Chris.
All right, in my preamble or intro, I spoke about, as espoused here by the producer, that at the end of the term, the asset may return to the finance provider or ownership may transfer. What might condition the fact that ownership returns to the finance provider?
Ownership returning to, this is in the arrangement of where someone has a finance lease. When you take out a lease, the logbook or the pro forma invoice or tax invoice will be registered in the banks of DFCU Bank. So like you're renting out, we would say you're renting out your tenant to that asset. However, at the end, after paying full term, full cost, if I bought a generator at 100 million and you pay up to 0 shilling, at the end we agree. Because for it to move ownership, there has to be a transaction. So you either say, I'm not taking it up, let me return it to the bank, then the bank can sell it out, which is a very rare case that has not happened, because everyone wants to own this asset at the end of the day. Or you'll pay a minimal fee called an end of term option, which is really below the minimal value. Like it's just a transactional item that a client would come and pay, then we do change the ownership.
Okay.
Yes.
So during the course of use of that asset, aspects including maintenance rest on the company or the finance asset the asset provider?
The company, because the customer who is using that asset is an economic owner. We are just a legal owner and financer. But the maintenance
is the economic owner.
Yes.
Interesting finance terms there. Let me just ask a broader picture when it comes to asset financing in Uganda. Is it a model that is being adopted or it's been around for a while?
It's been around for a while.
How come it's not as entrenched as many of the finance products that we are aware of, including the everyday loans and stuff like that?
Initially, financiers, because leasing was being offered by leasing companies. Then later it evolved. Banks took into the interest of having these products, because depending on the speciality that it involves, because you have to involve the supplier and also the customer, because you also know who the supplier is, what item they are providing. So not many banks at that time would take on this kind of products to sell out to their clients. And then also banks started with companies that were fully established. But as business evolved, banks thought that also individuals would utilize this product. So we came and remodified and said we can have leases, we can also have asset finance. Asset finance, which is just like a normal asset loan that you'd give to also an individual to benefit. And that is why you see the move has changed. And almost, I think, most of the big banks are selling this product to their client. As yes,
we are in an economy that many will look at and take to be a hard one. If a business or a person is already grappling with other obligations with financial institutions and they want to take on this particular product, don't the other aspects affect their ability to take on asset financing?
Yes, if you're really struggling in other products, because at the end of the day, the cash flows have to be there. However, when you take asset finance, especially those taking the asset for business, this asset is also expected to generate income, additional income, maybe in case of you're taking bigger or expanding. So when we are making our assessments, we don't only look at the existing kind of income you're making, but we also factor in that income that the machine or the car or the truck is going to add value to the business and how much it will make. Then we make a general assessment for a customer to see whether they qualify or they don't.
Okay.
Yes.
Let's keep the discussion on who qualifies. And I want you to find a way of encompassing the aspect of women into it, not because you're a woman. This is just down to the fact that many women out there who may want to seek assets might have a bit of trouble, just like they find trouble in accessing other products. I don't know whether there is a specific consideration for gender, or it is a case of if you have the money or you can demonstrate that you'll be able to take on the asset, then you can. It doesn't matter whether you are a man or a woman business owned.
Okay, thank you, Chris. When it comes to who qualifies, whether a woman or not, as long as someone has a source of cash flows, whether it's a sole proprietor, a man or woman, a registered company, a private company, or a government parastatal, investment club, women in business, as long as there's a source of income, we do not discriminate. Yes, so it's out to everyone, as long as...
It may not be described as discriminating, but perhaps dishing out an advantage on account of what we all know to be the challenges that many women-owned businesses go through. I don't know whether it could be a policy. All right, you said DFCU is up to something. You gave us a hint in the beginning, but I was more interested by, or rather first, ensuring that we thresh out the asset finance modalities before we get to what exactly DFCU is up to. Could you just take us through that again quickly?
Right now, like I mentioned, we have a running campaign for the next 5 months. It started in July and it will end in November. We've dubbed this campaign as big moves.
Big move, yeah.
Yes,
that's
make big moves. And under make big moves, we've come out with some special offers to our clients during this period. One of them, we are financing up to 90% as long as the asset is brand new. We are charging 0 arrangement fees. It means the customer will come and will not pay the arrangement fees. We also have a grace period of principal payments up to 3 months for those who would wish to take it up. We've partnered with all the major suppliers, franchise suppliers in the country, as long as you're picking up an asset from them, and also international, as long as it's brand new. So I encourage our clients, those who are clients and those to be, you don't have really to be a DFCU client for you to come and apply for this facility. So it's open to the public, as long as you have a source of income.
Source of income.
Yes.
Sandra Kagwa, Manager Asset Finance at DFC Bank, many thanks for shedding light on this particular product and also the big move that DFCU is up to. It's been a pleasure.
Thank you.
All right, that will do it for our business update, but do stay with us. There's a lot still coming up here on Morning at NTV. Replenish your cup of coffee.